with all this knowledge, right? Because when you have stall B selling more duck rice, right, then stall A is selling chicken rice, right? So the first thing you think about is that stall B having selling more duck rice will probably be much more profitable than stall A, right? Because the numbers look better. But you also have that knowledge that ducks are much more expensive than chicken, okay? And the geographical facts that you have older people around this estate, and gout tends to happen generally to older people, okay? And 2 bus stops down the street, you have another hawker center that has duck rice as well. Okay, so with all these combined knowledge, would you still consider investing in the duck rice based on only the fact that it is selling more duck rice? Or would you consider more towards investing in the chicken rice? Because they may not sell as many chicken rice, but they have much more profits per chicken rice sold. Okay, so these are some of the questions that Jay would ask himself before putting down his money on either one of these companies, or either one of these hawker stalls. Okay, so this is generally how an investor behaves. He needs to look at all these numbers. He needs to look at whether the products are good, the competitors are there, and whether is it feasible to invest in the duck rice or the chicken rice. Okay, so you have to understand that investor, right, he believes that every time he buys a stock or a share in the stock market, there's a business behind that stock market. It's not just a set of numbers, okay? And because how this business performs would reflect how the financial health of their financial statements, and in turn reflect a good indication of how the share price behaves. Okay, and okay, so let's talk about trading next. Okay, well, a trader, contrary to an investor, must be really fast in all the information gathering, the information accumulation or data gathering, right? And has to be really fast in the reaction when things happen. Okay, because all this, he looks at news, he looks at patterns, he looks at graphs of every share that he intends to invest in, right? News especially, right? Let me give you an example. Say Bill Gates, right? He decides to have a dinner with Mark Zuckerberg from Facebook, okay? And well, to them, it's just a simple dinner over friendship, okay? Mark Zuckerberg and Bill Gates, okay? So, but a reporter happened to walk by, and he saw these two big people having dinner together, right? And then she takes a picture of these two people, and then the next day on the headlines it writes, Bill Gates, Microsoft, Mark Zuckerberg, Facebook, new business venture, question mark, question mark, question mark, right? So what do you think happens to the share price of both Facebook and Microsoft the next day, right? The moment the market opens, right? Or probably saw. Okay, so having that news immediately, a trader would buy it as soon as he can, right, at a certain price, and within hours or minutes even, right, the share price soars, right, and then from there he sells he sells his Microsoft or Facebook's shares, and they make a couple of thousands because of that hype. And then moments later, people start to realize that, oh, damn, they're just having a dinner. That's it. There's no new business ventures and nothing of that sort. And what do you think happens? The market comes tumbling back down, right, to that same price. Okay, so a trader would have made money, okay, through purchasing Microsoft shares at the start when it rise, okay, and then before it falls, he could also decide to do this technique called shorting, right? and make money from there too. Okay, but shorting is another topic. We'll talk about this another day. And so a trader looks at these patterns and reacts really quickly to all these news that are happening. Okay, so